Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Warren Gilman. He's the CEO of Queens Road Capital. This is an interesting story that's come up on my radar. Several readers have asked about it. It seems to be trading like a uranium play, but that's not all it is. Warren, why don't you go ahead and give us an overview, and then I've got questions about your business.
Absolutely, Louis, and thanks for inviting me today. And you're really making me feel at home. I'm looking behind you and looking at your rock collection and your hammer, and it really does remind me of my days as a kid when my father used to have all his rocks and his rock hammer on the bookshelf. And perhaps that's why we're sitting here having this conversation today, because of those influences when you're 5 and 6 years old. Good morning, good afternoon to all your viewers. Queens Road is a public company. Yeah, as you say, it's trading a bit like a uranium stock. It's listed on the TSX. We are Caymans Incorporated, which is an effort to be as tax efficient as possible to the benefit of all our shareholders. We are managed out of Hong Kong. I'm talking to you this morning from our one and only office here in Hong Kong. I say one and only because we keep a very, very tight rein on cash outflows. We have one office, we have 3 employees, so we're about as cash efficient as you can possibly get, a la the royalty company type model. And our shareholders are very much dominated by Australians, which might sound a little bit odd, but very good friends of mine who I've known over the many years I've been in the business, and they were early backers of Queens Road. So I would say that probably 90% of our shareholders are Australian, even though we are Toronto listed. So that gives you the bare bones, that gives you the structure, Louis, of what Queens Road is. What do we actually do? We invest in great mining ore bodies around the world. So we are totally driven by quality of ore body. We minimize geopolitical risk as much as we can within the mining context, but we like to stay to relatively safer jurisdictions. We're commodity agnostic. So as you say, we're very heavily weighted to uranium at the moment. That's at the moment, and it's also a result of great success. And so the weighting in uranium just keeps growing and growing because our uranium investments are doing extraordinarily well. But we'll make an investment in any commodity as long as the ore body is a great one. And we focus on income generating securities. So things like convertible debentures. Securities that give us cash coming in, which we intend to distribute all our free cash to shareholders, but gives us unlimited upside in terms of the equity exposure. So we got all the upside, we've got income coming in, and our downside is protected because at the end of the day, in the case of a debenture, for example, we are a debt security. So if things go horribly wrong at the end of the day, we'll still probably get our money back.
Sorry, I got to jump in there. I'm not going to be mean. I do get the debenture idea, and I get that you get paid interest whether the mine ever gets built or not, and that you're, senior debt, you have recourse, and so your money is safer than just, shares that can go down the circular file there. But if something really bad happens, a la Rubicon, if you end up, repoing a mine, 90% of which isn't there, you're still going to get hurt.
That is quite possibly true, Louis. I mean, nothing in life is absolutely secure. Hopefully that never happens to us because we're only investing in really good quality ore bodies.
Quality ore bodies. Okay, we got the mantra.
I'm sure Canada Pension Plan, who invested in Rubicon, also thought they were investing in a great ore body too. So it doesn't mean that we're all going to be perfect or infallible. But we do our best to protect our shareholders and protect from the downside.
All right, so I get it, and I like the business model. It's different from just another royalty play and focusing on quality assets and the convertible debenture route. I like it. I have questions, but before we go there, can you tell our audience a little bit more about yourself? I found your bio on the website to be interesting, but kind of vague. You know, you're involved in these mega deals and CIBC days, but they're not named. You know, is there a transaction that we might recognize that you were involved with?
Boy, Louis, hundreds of transactions, and I've got hundreds of the mementos around here as well. They're all stacked up because I just don't have enough room for them. But probably the one that that really took my career forward was the IPO of Falconbridge, back when it was owned by Noranda and Trelleborg in 1994. So I led the IPO of Falconbridge and then did every piece of work for Falconbridge from that point forward. You know, a $2 billion secondary of Trelleborg's interest a couple of years later. Our run at Diamond Fields and Robert Friedland, which they've actually written a book about, The Big Score. So if you read The Big Score about ultimately Inco winning the acquisition of Voisey's Bay from Robert, I mentioned in the book. But so many other transactions. You know, the establishment of the original Gold Corp. I did all the valuations, the OSC policy 9.1 valuations for the combination of all of Rob McEwen's companies to form the original Gold Corp. The IPO of Meridian Gold, which was the old FMC Gold, where FMC Corp out of Chicago spun it out. The list is endless. Then I moved to Asia and started advising Japanese and Chinese companies on Canadian acquisitions and so on. And there was the run by Minmetals on Noranda back in the day.
Right, I remember that one.
Yeah.
Well, I suppose there in Asia is where you started hooking up with all your Aussie friends.
Well, that's it. I moved to Perth in 1997. I spent 5 years in Oz. Ironically, did very little in the way of mining deals because you'll remember that 97 to 2001 period.
Yeah, a minor event happened just before that.
A minor event happened just before that, and then post that, no one cared about mining. Remember, we were referred to as the Rust Belt industry. So here I was sitting in Oz, not doing much of anything in this great mining country. You couldn't give away a hotel room in Perth in those days. And then eventually the bank that I was with said, Warren, this mining thing, it's over. You know, it's just over. You'll never do another mining deal. So why don't you move up to Hong Kong, get to know this fellow, Li Ka-shing, who's the bank's largest shareholder, largest depositor, largest borrower, is the largest everything. So we really need someone to look after Mr. Li. And you won't miss out on the mining thing because in Hong Kong, because there is no mining thing anymore. And of course, ironically, I wound up being probably the only mining engineer in Hong Kong when China emerged as the dominant force on the global mining industry. So my move to Australia was probably ill-timed. My move to Hong Kong and China was perfect. And then the bonus on top of all of that was obviously getting to know Mr. Li. We established the predecessor company to Queen's Road, which was a private company, CEF Holdings, and we started buying mining assets back in those days. So although I was almost 30 years as an investment banker doing mining, raising mining capital and doing M&A advisory, I started to morph my career into the buy side and buying assets for Mr. Li originally, and now for the shareholders of Queen's Road.
Well, we're going to have to come back to this some other time over a beer because I bet you've got lots of stories that I'd love to get more of the skinny on someday. But
I have more stories about more of the people that you probably know and have interviewed over the years. Great stories.
Maybe there's a kiss and tell book in your future, but we don't need to go there right now. Okay, so I have questions about some of the assets, but let's just start with the bigger picture right now. I mean, one of the issues, you're not exactly a holding company, but with these holdings in these other companies, you kind of are, and there's often that discount. And if one of your holdings does really great, but you're only a fractional owner of that, so the benefit is diluted, why should somebody buy your stock instead of looking at your holdings and just buying those?
Absolutely right, Louis. That's a great question. And I don't mind if they buy the other stocks in addition
Well,
to
you're long
ours.
already.
And in some ways, people do and should take our investment in a particular company as an endorsement of that company. You know, we were early to the NexGen story, made our first investment, what was it, 2016, in the previous company, CEF Holdings. And we are early to the ISO story last year. So if we get into a story, that should cause people to take a pause, look at it, and say, well, good for Queen's Road for doing that. Gee, I should also look at this thing, and maybe I should buy it too. Because when we buy something, it means that it's a great ore body, it's got tremendous upside, and it's got a management team to go with it. So I'm not at all bothered by people making that investment. Why should they buy Queen's Road? Because, as I said, with us, your downside is protected. We're trying to take out all of the ups and downs and just have the ups. When I first
that's
went
not
to
a tall
Mr.
order,
Lee-
is it?
Well, not a tall order at all. But when I first went to Mr. Lee with the concept in 2006 and said, Mr. Lee, you know China better than any other person on planet Earth. China now dominates the global mining industry. No one can foresee the future of the mining industry, no individual person, better than you. And yet you don't have a single mining investment. Why? Why don't we do this? And his response, I kid you not, is, Warren, he says, the mining industry, I don't know. He said, commodities, metal prices. He says, they go up, they go down, they go up, they go down. He says, and I said, yes, but they do go up and they do go down. But generally speaking, they do this. They eventually go higher and higher and higher. You just need to try to avoid the downtrends or make your purchases in the downtrend. So if you can advise me as to where we are in that cycle, we're going to benefit from the long term. And he said, oh, okay, good. Let's go do it. Because he's very decisive. And from that point on, that was the start of CEF and now the continuation Queen's Road. And so when you buy a Queen's Road share, we try to avoid those downs. We really avoid the big downs because we're mainly a debt security and you still have income and we'll be paying dividends. And so you are protected, but your upside, there's no cap on our upside. So we are granted a more conservative investment structure. If you want to get real extreme upside, go buy marginal deposits. The risk to that is marginal deposits may never see the light of day. They may never get developed. If you get your timing right in your sale, you'll make money. If you don't get your timing right, or if things go poorly, you might lose everything. That's not what we do. We maintain a level of conservatism, but we give you all the upside exposure. That's the investor that we want. If you want speculation, if you want a trade, Queen's Road is perhaps not for you. We are a long-term, but an assured, positive story.
I think you're the first person I've interviewed that has told me an outcome is assured. But okay. All right. So I get it. You're
in the concept of if I have a portfolio that pays me on average right now 8% interest a year without any tax, the value of my portfolio, all other things being equal, is going to go up 8% a year at least. Upside in the quality of ore body from that point on, but I'm getting my 8%. So
Understood. All right. So the short version is there's a risk reduction that warrants considering your company versus the higher risk proposition of investing in one of these other entities. Okay, fair enough.
That's one point. Let me add one more point, Louis.
Okay, go ahead.
On. And the next point is, what is Queens Road going to do next? It's the optionality. What ore body are they going to find? What management team are they going to back? What's the next story? When you invest in Queens Road, you're investing in faith that we are going to take shareholders' money and do what we did with NexGen, what we did with ISO, what we're doing with all our investments. We're just going to keep building this, and we're going to be doing more interesting, innovative transactions with great ore bodies and great people. And you get exposure to that optionality, whereas individual companies, you've got that one story. With us, we're going to have multiple stories. They're all going to be moving in their own cycles. Not all of them will be up maximum price all at the same time. But you'll always have the optionality of these different commodities and these different ore bodies, plus what are we going to do next?
Right. Well, in that regard, then you would be like a royalty play, a growth mode, where it's all about, what's the next blockbuster deal.
Exactly. The benefit, in addition to not being as opposed to a royalty company, is that royalty companies, generally speaking, precious metal royalty companies, and they tend to be gold, which is great in a gold bull market. But when gold goes for a dive, you're saying, well, I don't want to own that anymore, so I'll get out of it. With us, it's going to be, well, gold may be down, but uranium may be up, or copper may be up, or you have the flexibility to move around. We, as an investor, have the flexibility to move around, whereas a precious metal royalty company, for better or worse, has to focus on that one commodity. And if you go through a 5-year bear market in that commodity, you got to suffer through the 5-year bear market.
Sure. Well, but presumably you're not going to move around during, in response to that. Presumably you would have moved around when something was in a bear market and you could buy it cheaper and then benefit when that one goes up later. I'm not trying to give you a freebie there. So let's talk about these wonderful quality assets that you've got. And actually, let me ask you about ISO. And I get the super high grade discovery there. And in fact, I invested in that one myself. I was a shareholder. It went through the roof. I took profits. So I get it. It's not very often you see 60, 70% uranium in drill core. But that super high grade portion seems to be kind of limited. I mean, the whole overall footprint goes for kilometers and kilometers the other way, but it gets much lower grade very quickly. And the high grade stops at the border. And Cameco is not doing anything on the other side of the border. So, you stress the quality of the ore body, the quality of the asset. And that one, as exciting as it is, I don't see how that gets much bigger without Cameco getting off its butt and buying them out or doing something else. And Cameco's got other priorities. I mean, maybe that happens 4 or 5 years from now. But right now, I don't know. I mean, tell me I'm wrong. What am I missing about that?
No, Lou, you have a very good understanding of it, and good for you. You've clearly looked at it, and I think you've summarized the situation well. But that question remains an open question. What is Cameco going to do? Clearly, that ore body extends over the property boundary. Can ISO do a deal to get a piece of that? That's one option. ISO, as you know, is majority owned by NexGen. NexGen, I think we all can agree, is pretty darn focused on Arrow and developing Arrow. And in addition to that, doing some more work in the area on the Rook I deposit generally. That leaves all the rest of the Athabasca Basin as an area that clearly the team at NexGen know extremely well and have had great success, not only at Rook 1, but through ISO at Hurricane. What else is the group going to do in the Athabasca Basin, and what role does ISO play in that? And ISO, given its success, is a pretty substantial company now. It has a fair amount of firepower, not just from a market cap and a paper perspective, but they've obviously got NexGen's backing. They've obviously got Queen's Road's backing. Again, talk about optionality. What other things could ISO do in addition to having this core great deposit? Optionality.
Actually, you said something quite interesting there. Let's go back and rewind for a second. I've been thinking about Cameco buying ISO to have that large high-grade thing in their pipeline, whatever size it turns out to be. But I hadn't really thought about it going the other way around. If uranium remains lower for longer than we hope, at some point maybe Cameco actually wants to raise money, and maybe they would sell. I hadn't thought of that. I just assumed that at some point Cameco would want this asset, and their side would not be for sale. But yeah. Could the tables be turned, and what would that cost? And could Queen's Road back a deal like that if that actually were to come available?
Absolutely. I mean, as you know, Cameco has effectively, for the last how many years, stopped funding all exploration work, like virtually all exploration, and completely understandably.
Sure. You've got mothballed mines. Why would you be exploring for more?
You got 400 million pounds, reasonable quality pounds, sitting there waiting to be exploited. We don't need to find more. So exploration has stopped. So they have this ground with great potential that no one's spending money on. Wouldn't they be better off holding an NSR or 10% interest and have someone spend some money on that project and develop or find the next big thing? Of course they would. So logic would suggest, if you're not going to spend the money on it, which you're clearly not, let us spend the money and make money for you. Makes perfect sense.
Yeah, they'd have to, I would assume they'd have to retain some significant exposure to the upside. Because if you're going to create your own competition, you're not going to do that, without something in it for you.
It has to be a win-win. And boy, there's nothing better than discovering, 100 million high-grade pounds to make a win-win for everyone. So the logic is undeniable.
Interesting concept. I had not thought of that before. Okay, so moving through the portfolio, we don't need to talk about NexGen too much. I think everybody can agree. Wonderful discovery. Just waiting for uranium to come around on the guitar. Adriatic. It's sort of billed as a silver polymetallic, but it's really mostly base metal. In an interesting part of the world. Now, actually, I'm not that afraid of that part of the world. It's a bit off the beaten track for many investors, but I've been there, and I see a place that's open for business, that wants business, so I'm good with that. But zinc's already run up to pretty high prices, and I'm wondering, of all the projects in your portfolio, this one seems to be the one closest to production, and yet maybe most vulnerable to its primary value having already run up. So why do I want exposure to that?
Right. Well, first of all, a slight correction. At spot prices, the precious metal component of the revenue stream, the net revenue stream, will be in excess of 60% precious metals and majority silver. So it is.
Yeah, nobody uses spot, but okay, I get it. There's this. It's substantial. It's not a little silver credit.
It is the biggest credit by far of the metal suite that's there. So big silver exposure, which is important because when you look at funding, for example, here is a really, really high grade ore body. that is predominantly silver, and you look at the valuation of a silver stream in that context, it just makes the funding requirement so easily obtainable, because people love streams generally, and they seem to love silver streams in particular. So that gives you a lot of financing flexibility. The NPV of the project is, at today's prices again, in excess of $1 billion. So I still think there's plenty of upside on the defined project. But within Adriatic itself, you got a great management team who have proven an ability to create value. They have a real first mover advantage in Bosnia, so they know their way around that country. What else can they find? They've only been at it a few years, and they've already found an ore body that's worth $1 billion and is incredibly economic. An IRR in excess of 100%. When do you see an IRR in excess of 100%? And now they're moving, as you've seen with the Tethian acquisition, with a focus into Serbia as well. Again, Serbia is a country that seems to be welcoming the mining industry with open arms once again, and tremendous geological potential there. So a lot of optionality in addition to this wonderful cash flowing asset to form the basis of the company, that downside protection, if you will.
All right. So if you were involved in, if you give away a silver stream to build the mine, then that's not funding coming from Queen's Road. That's funding coming from somewhere else, unless you become a royalty play. What's the end game there for Queen's Road shareholders? I mean, do you hold that forever, and until they build a mine, until they mine it out? Or do you help them get set up, and as the thing goes through the pre-production sweet spot, do you cash out at that point and say, okay, good luck? Or how does that play out?
Good question, Louis. And that question applies to all of our investments. And, I really believe that the real creation of value beyond exploration is obviously ultimately the construction of the mine, and then you have a re-rating, and then you become a real cash flowing company, and then you can decide,
assuming success,
then you have to decide whether you want to stick with that company or not at that point. But we're very much all about getting mines built, and one of the joys of the mining business is that it's rather capital intensive. That means that companies always need more alternative financing sources. So it provides an abundance of opportunities for someone like me, someone at Queen's Road Capital. There are always mining companies out there who need more capital to develop their project, to construct their project, and then get the next project. And what Adriatic will do is the same as what NexGen will do, probably the same as what ISO will do, etc. And that is get the permit, raise construction financing, build the mine, become a cash flowing, dividend paying company. Somewhere along that path, they will either require more capital from Queen's Road. Great. I'll put my hand up because I like all of these ore bodies. I'll put more money in if they need me. Or the banks come in and they say, we don't want any other debt there. We'll just pay you out. So we convert, get paid out. We go on to our next great story. So at the end of the day, we have a number of options as to whether we stay with the company, add more, or move on to the next one. And that's what we'll do with Adriatic. At each stage, we'll make a decision, we'll make an assessment and say, we staying, we going, we adding more. Is it time to convert and take some money off the table?
All right. Okay, let's talk a little bit about Vizcachitas. Altitude, water issues, social issues. I mean, Chile is famous as being a pro-mining jurisdiction, but it's changing. And now we have this new tax. And, what does that do to the IRR of a project like that? I got to just say that these big, bulk grade, high in the Andes projects in Chile, and actually the other side of the border too, they make me very nervous these days. What makes you comfortable with that?
Okay. First of all, we're 200 kilometers outside of Santiago. So we're not high in the Andes. We're at 2,200, 2,300 meters. So even I can go there. And
Okay. All right. By Chilean standards, I get that. That's not so bad.
By Chilean standards, it's a great location. The closest village is 20 kilometers away. 20 kilometers away, but we're only at 2,300 meters, and we're only just outside one of the population centers. So we're actually located in a great position. You're right. With any mining story, you always have social license. We will get there. We will get there. This is not any different than any other project anywhere else in the world. Water issues, we have different options to solve that. I won't go into that at the moment, but our due diligence showed that we're totally relaxed about the development potential about this deposit. So let's all leave that aside because it is a great ore body. I should make one more point. The real kicker in this is the scalability of it. I mean, 6 billion pounds of copper. There's probably 12 billion pounds of copper. This is a project that any medium to large size mining company in the coming decade is going to want, because the opportunities to get copper at scale, something that'll move the needle for that developing copper company, those things are as rare as hen's teeth. I have been looking for an investment in the copper industry through CEF and now through Queen's Road for the last 10, 12 years. And to find one that is of scale, that is economic, that is in a mining country, and that will pay me a coupon of 8%, even though they have this sexy metal called copper, that is very difficult to find. And so when I found it, I grabbed it, and I hope that we get the opportunity to do more. So that's the story about the ore body and the motivation. Political winds of change. This is a global phenomenon. This is not a Chile phenomenon. This is a phenomenon that is going to affect the mining industry wherever we go. And that's Canada, that's Chile, Peru. The story is unfolding. We'll see what happens all around the world. But these are just risks of the mining industry. At the end of the day, I'd make two comments about Chile. Chile, 30% of the world's copper comes from Chile, something like that. If we go through a period where one cannot economically develop an ore body in Chile, is copper going to be $5 a pound? It's going to be $10 a pound, maybe higher. So we have this natural hedge where the copper that we are now exposed to, it's not going anywhere. And if this pendulum swings in Chile to such a point where people just aren't developing new ore bodies there, then the good news is the value of our copper is probably going to double, and eventually the pendulum will swing back. That's a comment on politics. But at the end of the day, Queen's Road, we're not here for a trade. We're not here for a flip. We're investing in great ore bodies. Our convertible debentures, generally speaking, are 5-year maturities. So we have a 5-year convertible debenture, plenty of time for the story to unfold. Let's see where the copper price goes. In the meantime, I get my 8%, and I own a piece of a great ore body.
So have you ever actually unwound one of these deals? Like it didn't work out the way you hoped. You had your debenture, you didn't like the way the company was going, so you converted, liquidated, and moved on to the next one?
We tend to be pretty loyal shareholders. So generally speaking, we stick around. As I mentioned, we made our first investment in NexGen in 2016.
Sorry, was that your first investment of all, or just your first investment in NexGen?
That was our first investment in NexGen. So 2016 was so that was 5-6 years ago. We on that first debenture, we agreed to extend the maturity. So we started off with a 5-year debenture, which became a 6-year debenture. And then, Mr. Lee just recently converted all of those debentures into equity, and now he's the largest shareholder and hasn't sold a single share. So that gives you the sort of indication of where we go with these things. One story that I can give you that where we did exit, where things didn't work out that great for certain people, worked out fine for us, was one of our earliest debentures we did in 2008 or 9, a thing called Duluth Metals. And Duluth Metals was the owner of a project in Minnesota, and it was a copper nickel project, very akin to the current Tamarack that's listed in Toronto. And Duluth owned 70% of the project, and Antofagasta was a 30% joint venture partner. We had a convertible debenture, myself and Mr. Lee jointly, for a total of $30 million. And then the GFC hit. The concept of raising, at the time, $3 billion to build this massive underground copper nickel complex in Minnesota was viewed by the market as a bridge too far. And the stock fell rather dramatically. One of the reasons why I invested in this company was that it was a great ore body with a great joint venture partner who I knew loved the ore body. And I always felt that if things got terrible, Antofagasta would just come in and take the thing over. And sure enough, they viewed this as a tremendous buying opportunity. Antofagasta came in, made a takeover bid. One of the joys of our converts is that we have all sorts of bells and whistles, which people generally don't dig into the details, but one of the things that we have is often change of control provisions. Change of control provision says if someone comes in and makes a takeover, I don't care what price the stock is, you have to offer me 130% of the value of my debenture to get rid of me. You pay the shareholders whatever you want, I get my deal. And that's precisely what happened with Duluth. Even though the company was taken over at a relatively low price, I made my 8% coupon every year, and then I got 130% premium on the takeover by Antofagasta, who continue to own that ore body. So there's an example of a takeout that was in tough times, but because of our structure and because of our conservative nature, we did very well by it.
Okay, well, that's quite a story, Warren. So I'm pulling back to big picture, and given that strategy, and given how you get paid whether the mine gets built or not, you're deploying capital. What I found curious looking over your company's materials is how the heck did you get to 277 million shares issued and outstanding already? Now, your Australian backers might think that's a small number, but you're listed on the TSXV, and up in the Great White North, that's a lot of shares out for a company that's. You're not a producer. How did you get so many shares? I mean, was that issued for acquisitions, or where did all that paper come from?
Yeah. No, well, we started off with a company that was TSX listed, that it was a shell. And obviously, when you take over Shell, it has a certain number. I'm trying to recall, maybe they had 30 million shares outstanding, which by Toronto standards is, probably about right. And then we raised $84 million at a price of, on average, sort of 38 to 40 cents. So that's all your paper right there. Not another share. That's how we got to 270 million right there. Now,
and that was for acquisitions. Sorry, that was for acquisitions.
That was to bring in our Australian shareholders. So we issued all those shares at about 40 cents to raise $84 million. So that is the entire capital structure of the company. At some point, when I think, we raised that money at 40 cents, the stock is now 70 cents, which is probably a good share price for a TSX.V listed company. When we graduate to the main board of the TSX, we'll probably consolidate the shares and we'll trade at $7 instead of 70 cents, and we'll have 27 million shares outstanding rather than 277. At the end of the day, it's all the same.
As long as you have cash in the bank. If you were scraping the bottom of the barrel and did that, everybody'd say, "Oh no, here comes the dilution." But if you're cashed up and cash flowing, then you probably would get forgiven for that. Okay, well, Warren, you've been a pretty good sport with my obnoxious questions about your beautiful assets there. So I don't want to presume too greatly on your time, but I always ask everybody the skin in the game question. I don't own your stock. My audience, I don't know how many do or don't, but if you want us to put our own hard-earned money into your company, how much of your own cash have you put in? Not just options given you, but how much money do you have skin in the game here?
Yeah. No, a very, very reasonable and important question. But Louis, I'll just step back. I really appreciate your not obnoxious questions. You clearly understand these investments. You clearly understand the ore bodies and the surrounding areas. So great. I always love to have these conversations. I could talk to you all day about this stuff. So I really appreciate the opportunity. Now, skin in the game, I've put $5 million of my own cash into this. And I came in, we all came in with the Australian billionaires, the same price, and we're all in it together. I had lots of opportunities before we formed Queen's Road to establish a mining fund. And being based here in Hong Kong, you get lots of mainland money coming down saying, looking for mining expertise, please help us deploy the funds and so on. And, funds can be very rewarding for guys who manage them because you have the 2 and 20 participation where you get 20% of the upside. We have no management fee. I make money like the shareholders do. Have the share price go up. So as I say, I got 5 million. We got no management fees. We got 3 employees here at Queen's Road. We're all in this together, and we will sink or swim together. But you know what? I think we're going to swim pretty well.
Wow. No management fees. You're not saying you draw no salary, right? You're like, who is it? Is it Friedland or Beatty who has a $1 a year salary or something? Are you in that boat or?
I'm not in that boat, and I'm not in their income bracket either. So I do have to pay my rent here in Hong Kong, because one thing about living in Hong Kong, rent is pretty darn expensive.
I can imagine.
So no, this is all a matter of public record. My salary is $400,000 a year. My president's salary is $200,000 a year, and my CFO's salary is $120,000 a year. These are all high quality individuals, which I must admit we're paying sub-market for, but we're not doing this for the salary. The salary goes to pay our rent. We're doing this for the opportunity to, along with our shareholders, do very well on the share price.
All right. Well, I'll let you have that as the last word. I appreciate you sitting still for me and my questions here in the pit. I wish you the best of luck and keep us posted. I look forward to hearing about your next blockbuster deal, Warren.
Louis, it was a great honor. Thank you.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.